Good morning, good afternoon, good evening. Thank you guys once again for joining the 980s podcast hosted by yours truly, Kevin Thompson, founder and CEO of 980 Capital Group. Thank you guys for joining us. As I always say, subscribe to the channel. As I always say, go and get my book, MIB to CFP, live on Apple and Amazon. If you have any questions, comments, or concerns, you can email us at info@9icapitalgroup.com. Send us your questions, or you can go to the website at www.9icapitalgroup.com. Schedule an appointment. As you know, we're here to do what? Educate, empower, and engage. And today we're talking to Ivana Delevska, CIO and founder of Spear Invest, ticker SPRX. I just want to know one thing. Are valuations justifiable in this AI industry? Well, we're going to find out today. Let's get it. We have Ivana Delevska, founder and CIO of Spear Invest. Ivana, thank you for giving us some time today. And I know it's busy. Just thank you for joining the 980s podcast.
Thanks for having me, Kevin.
Well, full disclosure, we do own some of the SPRX fund within some of our portfolios here. So I just wanted to get that out there because I don't want compliance and the SEC coming after me. So, but again, the fund has done phenomenally well over the last 6 to 12 months, 31% and 63% on absolute returns. And then, of course, relative outperformance of the NASDAQ of 47% and 82% from 6 to 12 months, respectively. Ivana, how have you done it? I mean, it's been a phenomenal run. I know tech has done very, very well, but I mean, tell us about like this outperformance in your fund, just really quickly.
Yeah, absolutely, Kevin. I'll talk a little bit about our investment philosophy and process. Mm-hmm. We cover about 120 companies, and we really are deep in the details of these companies, which allows us to spot trends before they become mainstream. So that's really how we generate a lot of our ideas, will be from understanding the value chain and extrapolating data points from one company to another. So we were very early to the AI trade, so that was a big driver, I would say, of our performance over the past several years, even not just last year. But really, that's kind of what it comes down to. It's digging into these companies and figuring out what trends are actually emerging from them. So it's from the bottoms-up analysis that we spot these bigger trends.
I love what you said. You said trends. And I just want to get right to it because I'm fearful. I'm not fearful of the AI technology like Terminator, where they're going to come after us and they're going to be taking over humankind. But what I'm fearful of are the valuations in that sector. I know you have Nvidia, that's a large holding in that sector. And of course, you sent out this beautiful chart a couple of days ago. You showed the OEMs, you showed the kind of the value chain in regards to like who makes the chips, where the chips are going, and then how the chips are processed and all of that stuff. Do you truly believe, and I'm not going to single out any specific company, but do you truly believe in the valuations that sector is getting at this present moment?
Well, Kevin, if you look at the valuations, now I do want to distinguish between market cap and valuation, right? Okay. If you look at the market caps, they have exploded to the upside. And this is largely driven because earnings have exploded to the upside. Mm-hmm. So if you look at the valuations themselves, which would be the multiple that you apply to these earnings, that actually is looking pretty reasonable right now. So a lot of people are still skeptical that we are at some sort of a boom or peak or bubble, right? So they're not really applying peak valuations on these multiples. So in bubble territories, what we would expect to see is peak multiple on peak earnings, and we're not really there yet. So what we've seen right now is the market cap upside has really been driven mostly by earnings, especially this is the case for Nvidia. The rest of the universe, they're seeing a boost from AI, but their other businesses are not doing as well. So the boost from AI that they're seeing is somewhat offsetting the cyclical businesses that are just emerging from a down cycle. And this is common to see higher valuations on these trough earnings, right? Because if earnings are down, 20-30% from where they were at the mid-cycle or the peak of the cycle, you are going to be applying a higher multiple on those trough earnings. So that's kind of a broad sense of how valuations work for the space.
Yeah, and I get that, but as an investor, right? So I'm going to sit here and say, hey, I'm going to invest in company X because I think it's going to grow to company Y, right? And if I'm already seeing a $2 trillion market cap where I'm thinking, well, let's just use Nvidia, right? Nvidia's $2 trillion. How can I justifiably say, well, do I really believe that if I put my dollar in today, this $2 trillion is going to go to $2.5 or $3 trillion? It's just very difficult from an investor mindset. And that's how we see it as investors, to put money towards something that, if you're like, generally, do I think it's going to double? I mean, if it was at 500 million, yeah, I can see that doubling, but 2 trillion to 3 to 4, that's just kind of difficult, especially when Apple's already $3 trillion, right?
So the way to think about that, Kevin, is that in order to get upside in the stock, you would need to see upside from the earnings estimate. So whatever people are estimating today, you need to believe that the numbers ultimately will come out significantly higher than that. And if you look at Nvidia's estimates for this year, they're already up quite a bit.
Gotcha.
But if you look at 2025 and 2026 and beyond, the market is assuming around 20% CAGR, which is significantly lower than data center grew during the prior cycle. During the prior cycle, even without Gen AI, the data center segment grew at around 40% CAGR. So we are thinking, and we do also bottoms-up analysis and plot like, okay, how much is Google going to spend? How much is Meta going to spend? How much is Amazon going to spend? So that's kind of how we built out our forecast. And we are expecting the CAGR to be closer to 40 than to 20. So that's where you're going to see the upside come from. Now, one thing I would say to your point is that when Nvidia was at the bottom of the cycle, you would expect an outsized move to the upside.
Yeah.
From here on, we think it's more of a defense play where it has a pretty solid support from the numbers that they have already reported and the valuation that I talked about. And then over time, as these earnings come out closer to where we believe they will be, if we're right? So there is always a risk that they don't. But if they come out closer to where we believe they will be, that's kind of how you're going to see a compounding in the stock. So we think from here it's going to be more of a compounder rather than doubling every year.
So we're talking about that sector because we have regenerative AI, have all these different AI complexes, and the reason why I believe it's kind of in that bubblicious territory because everybody had .com at the end of their name in the 2001. Now everybody's using what? .ai, right? Everybody wants to get that nice little push from .ai. You and I both know in the economic cycles that theoretically in a perfectly competitive market, all profits go to zero, right? And at the end of the day, like because there's going to be competitors coming into the market, they're gonna do it cheaper, and then profits are going to get depressed to where basically companies go and then new companies come in. So right now in that particular company that we just discussed, they have margins that are substantially higher than most because they can charge a premium on that price. Now, we all know that there's going to be the Intels, the AMDs, and all these other companies that are going to catch up eventually. So that goes back to valuations again. If these companies can catch up, eventually we know that's going to happen. $2 trillion again. I'm like, well, I know in the future this is going to happen. So should I be leery of that occurring? So just to know that maybe we should diversify out because we know these other companies should be able to compress their margins.
Well, I think there is going to be a lot of room for many players to enter the market. I don't think that will come necessarily at the expense of margins. If you look at the latest model that Nvidia introduced, so basically what they're trying to do is going from a 2 to 3 year innovation cycle to a 1 year cycle, right? So now every year they're going to be coming up with a new version that is better than the previous one. So if you look at even the margins in the second half, to your point, they are going to be slightly lower than what they were on the prior generation because they are trying to accelerate this innovation cycle, and that has to come from somewhere, right? There is the benefit will be that you get better products faster and you fend off competition, but you do give up a little bit on the margin side. Now, what I would say is that data center historically, the data center products don't necessarily compete on price. They compete on performance, right? So every time, like right now, Nvidia has come up with this Blackwell GPU, which delivers twice the amount of performance that the H100 delivered, right? Okay. So now their competitor will need to deliver the same type of performance, right, to keep up with them. So it's not as easy as looking at it from the outside, just because these products are very complex to manufacture. Like when you think of a chip, you think of something that you hold in your hand, but the shipments, the H100s that go to these data centers are 70-pound machines, right? Yeah. So this is not something that's very easy to replicate. And then a lot of the innovation is coming from how these chips are integrated to work together. Okay. So whoever does that better is going to have an edge. And Nvidia has been already working on that for 10 plus years now. So we do think that they have a pretty solid advantage here, but we do expect AMD's already entered the market. And just from security of supply, right, all of the hyperscalers are going to have to consider AMD's product as well and incorporate that into their products. So just because you don't want to rely on one vendor, but even if you assume that NVIDIA market share will decline, it could still imply a 40% CAGR, if that makes sense. So even assuming that new entrants will come in, that's already kind of embedded in our math. And then one last thing I would say is that if you look at that map that I put together on the ecosystem,
that was great, by the way.
The chip designer business model. So basically, the chip designer business model is really the strongest business model out of that whole value chain, just because these companies really rely on R&D, but they're not really deploying significant CapEx, right? So the returns you're seeing are really as a result of that, right? When you see the CBDA or when you see revenues of 100 billion, there is a lot of R&D investment that goes into it, but it's not a very capital-intensive business. So the returns come straight to the shareholders versus some of the other ones like TSMC, which is also a great company that actually manufactures the chips. Yeah. This is a much more difficult business, right? Because you do need to invest and you need to execute on the manufacturing footprint. And Intel is getting into this market, and we're going to see how that plays out. But these are all, even though they're all playing the same broader space, they're all very different business models in terms of what exactly do they do and what types of returns do they generate.
So at what point in the cycle, what would make you as a portfolio manager, and by the way, you're in the 9 Innings podcast with the Ivana Delevska of the Spear Invest, and we're talking about her fund, we're talking about AI, and my question now is, what would make your ideas change in regards to this space and being more heavy towards this space compared to the NASDAQ? Like, what would come out and say, you know what, this regenerative AI and this technology space, it was great for the last 12 months, but we want to change our focus to something else. What things in the cycle or what in the market would make your ideas change?
Yeah, absolutely. So the way we construct our portfolios is basically looking at each individual holding and the upside we see and the risk associated with it, right? Okay. So if you see multiples go towards the high end of the range, like peak multiples applied to peak earnings, that's when you start worrying for these companies. Okay. Right now for Nvidia, you have 1 or 2 year in earnings, so they're not necessarily peak in our view. Gotcha. And a mid-cycle multiple. So that is a pretty decent place to be in. The rest of the semi space, I would say it's peakish multiples on trough earnings, right? So we're gonna see how earnings play out, and that's what we're excited about. So that's really how we're looking at. We're looking at in order to be like less constructive on the space, we want to see peak multiples on peak earnings, and that's when you would want to start sizing these companies down. And then also I would highlight that if you look at that ecosystem, it's really not just the the chip designers that we are finding opportunities in. This year in particular, we're starting to see the opportunity set from investment perspective, especially really broaden out. So even utilities and even companies like copper miners, even those that we expect will benefit from AI. So we always look for valuation. Valuation is a big input in what we do. So we want to see, okay, well, where the copper miners trading at, right? Is the opportunity priced in there? Where the power generators trading at, right? Like, are people really, have they priced in the opportunity on the power generation side? So that's part of like what I was talking about earlier. We look at the entire value chain to find out, okay, well, we all know AI is a big trend now, right? But where are the actual investment opportunities?
Yeah, like hardware, cloud integration, cybersecurity, you mentioned in the past. And people aren't really talking about the energy that it's going to take to keep these data centers just humming 24 hours a day, 7 days a week. I don't know if it's going to be nuclear. I don't know if it's going to be old, dirty coal. I don't know if it's going to be people, going to the mines again. I don't know, but it's going to take some kind of energy to get these things going. And you're absolutely right. And that's why you do what you do. Ivana, I got one more question for you, if you don't mind. Last question. Where do you see the biggest benefit for AI in this directionality? Like, who is going to benefit the most, or not just who, but how is it going to be the most useful for the everyday individual?
Well, the most immediate application is productivity improvement.
Gotcha.
So you're going to see a lot of these productivity tools, whether it's Microsoft Office becoming really smart, whether it's on the software development side. You won't necessarily need to know code anymore to be able to code, right? You will be able to do it with natural language.
Gotcha.
So a lot of these industries that are very easy to processes that are very easy to automate. Gotcha. That's going to be step one for where we're going to see the biggest impact. And then I would say areas like marketing, like drug development, all of those are just big markets. We're just in the very early innings of those. So those will take maybe 2, 3, 4 years to develop to a point where you're starting to see real benefits. But it is very easy with what we have today in terms of generative AI to optimize some of these products that already have large installed bases. They're already kind of proven business models. They're now just going to be a lot more useful. So CRM systems is the first thing that comes to mind. And that's why you see the Google looking at HubSpot. That's one of the places here where like they can use the generative AI and optimize a marketing platform.
Well, okay. I lied to you. One last question. I promise you. This is it. I'm going to let you go because I know the bell's about to ring. What scares you about this technology? And you don't have to answer if you don't want to.
We don't know ultimately what the impact will be over the long run. But I think a lot of people have this like worry and doomsday scenario. I would say as fast as we see this evolving, it's also not that fast, right? So we've been talking about robotaxis for 10 years now. I don't see any robotaxis just yet, right? So it's not even something that we think is going to be in use in the next 5 years. So a lot of this is new and is great, but while it seems like it's developing at a very fast pace, we are really in the early innings. So there's really nothing that immediately comes to like a big warrior. Like we're not in the camp of, oh my God, like computers are taking over the world.
Hey, Arnold Schwarzenegger is going to come save us. I'll tell you that right now. But Ivana Delevska, founder and CIO of Spear Invest, manager of Spill Alpha ETF. Thank you for joining the 9 Innings podcast today. Thank you for your knowledge. Thank you for your wonderful investment strategies. And thank you for just being a true supporter of our firm in regards to, allowing us to go into your firm or your fund, even though I know it's an ETF, and just giving us some information about it. But thanks again for all of your support.
Thanks, Kevin.
We have had Ivana Delevska of the Spear Fund, ticker SPRX, on the 9 Innings podcast. Delightful conversation. We talked about AI. We talked about valuations. We talked about what's next and how it's going to benefit us moving forward. And we also talked about what scared her, or what scares us all, in regards to this AI space. It was a delightful conversation. Thank you guys for listening to the 9 Innings podcast. As we always say, subscribe to the channel. As we always say, go and get the book, MLB to CFP. Have any questions, comments, concerns, you can email us at info@9icapitalgroup.com. Go to the website, www.9icapitalgroup.com. Schedule an appointment. As you know, we're here to do what? Educate, empower, and engage. And I hope today was educational because AI is for real. It is here. It is growing. Who knows what's next? Stay humble, stay safe, my friends. See you again soon.